So let's. I mean, we're 2 minutes past the time, and so I want to thank you all for joining us in this March monthly policy update. My name is Ana Montañez, and I am the Government Relations Manager here in Independent Sector, and I am joined by Wes Cullum, our trusted advisor at Washington Council Ernst & Young. Prior starting, I want to just say a couple of things. This is an event that is usually for independent sector members. I am joining you from Washington, D.C., and I want to acknowledge that a lot of the buildings that are around the city were built by enslaved people, and also that this is the house of the Piscataway tribe, who are trying to continue to work really hard for their communities and reclaiming their land. So that being said, I know that if you are in the area, you've been able to see the cherry blossoms. So spring is in full bloom here in Washington, D.C. But besides the cherry blossom, there's a lot of stuff that has been going on, especially for nonprofits this month. And so I'm gonna ask Wes if he can give us a recap of everything that has happened between the omnibus that passed, then maybe where are we heading with this Build Back Better, our negotiations back on, and then last but not least, of course, the president's budget that was released earlier this week. So we have tons of things to cover, and we are very excited that you guys are here. And so I'm just gonna kick it off to Wes.
Great. Yeah, thanks, Anna. A lot to talk about. Busy month of March with all going on. Obviously, we're still, unfortunately, in the middle of a war in Europe with Russia and Ukraine. Obviously, watching the events taking place over there, and this displacement with people being, refugees, etc. So a lot of efforts by the charitable community to help in that regard is ongoing. So that's kind of also in the backdrop as we talk about these issues here in the U.S. Obviously, as you mentioned, the big issue, was enacted earlier this month, was they finally did reach an agreement on an omnibus appropriations bill, the $1.5 trillion funding for the remainder of FY 2022, just to get us through this year to September 30th, which we'll have to do it all over again this year. That was enacted into law by the March 11th, around the March 11th deadline. I got that taken care of and finished for this month. So one thing that did not make it in that package was, excuse me, additional COVID relief funds, about $15 billion or so, that was offset by taking back some of the unspent state and local government funding that would cause an issue in the House. And so that was dropped out of the package before it was passed and signed into law. There is some conversation taking place between Senator Schumer and Senator Romney and some of the kind of a moderate group of senators, see if they can find a path forward to move something separate on. I think the number is going to get smaller. I've heard down to 10 billion in funds for COVID relief, provide additional funds for support, vaccines, testing, etc. I think it is needed out there as the COVID continues. Hopefully they'll trying to find a way to pay for it has been the issue thus far, and find a way to get that taken care of and finished. That would probably move separately if they did get agreement by itself at some point, potentially. So that's still kind of hanging out there, if you will, from the omnibus appropriations talks and negotiations. So now we're kind of into new appropriations season, with the president's budget being released on Monday for FY 2023. Lots of the same proposals that he's had in the past from his previous budget out there, kind of repeating several things out there. This will kick off the appropriations process. You'll probably see a number of hearings taking place in the House and the Senate with various administration officials, Secretary Yellen on the Treasury side, HHS, other department officials now doing hearings in the various committees of jurisdiction in the House and the Senate, and the appropriators starting to get their work together on moving their appropriations bills for FY 2023. I think that'll mostly be taking place in the House. The Senate has always been slower to act on appropriations bills and more challenging given the 50-50 split. And so I would imagine that you'll see the House move some appropriations bills in the next couple of months, but really not anything resolved until September towards the end of the fiscal year. So that's going to be ongoing effort from that standpoint. In the president's budget, we saw several things on the tax front. Obviously, he revisited the Build Back Better Act tax provisions that were in the House passed bill have not been enacted. He also provided the new billionaires minimum tax, taxing unrealized gains of property, a modified version of what he had before and what's been proposed in the Senate and the House by various members. Already some pushback from Senator Manchin on that issue. Various increases in tax rates, corporate tax rate 20%, going back to 39.6% tax rate for individuals, which is in previous versions of the budget, as well as other changes to the estate and gift tax. Two provisions in the charitable sector in particular. One had to deal with conservation easements to modify the deduction for conservation easements based on litigation that's been taking place at the IRS and legislation that's also pending. Senator Stabenow and Senator Daines in the Senate and elsewhere. Also a modification to private foundations and DAFs, which is a new provision not in previous budgets that would deny the ability of private foundations to use a qualified distribution by making a contribution to a donor advised funds for purposes of their payout requirements. That is also new in the president's budget for this year. So that's kind of out there. I think that'll get a lot of attention, a lot of conversation. The real question is what could some of these provisions move as part of going forward? So there really are, I think, two big pieces of legislation on the table right now. One is the China Competition or the Competes Act. They're going to go to conference on, or have started the process to go to conference on in the House and Senate. That bill provides some support for semiconductor companies and some more domestic investment in the U.S. I do not see that bill ballooning to become a big package of other things and probably more targeted. There is some speculation of could it include some tax provisions in there potentially. At this point, I see that's probably a low possibility, but we'll see how the conference goes. It's going to probably take a good month or so for them to kind of work that conference out, and could be probably completed by, my guess, the May Memorial Day timeframe potentially for that. Obviously, we've been talking also about the big other issue, the Build Back Better Act, which in its current form has passed the House, is pretty much dead, given Senator Manchin's objections to it. But there has been some, glimmer of hope, if you will, from Senator Manchin the last couple of weeks, talking about willing to engage in new negotiations about a revised, smaller package, really based on the climate provisions in that package, the energy provision, energy tax credits, et cetera, in there. Has not been supportive of some of the child care or child tax credit provisions that lots of the Democrats in the House have been pushing, other Democrats in the Senate have been pushing for as part of that package. So we will see kind of where those negotiations progress. You see this issue, obviously, fits and starts up and down. It's dead, it's back on. I think, right now the question is whether or not Senator Manchin is serious about getting to a yes on a final product, and can they agree to something more scaled back on what they've been negotiating thus far. I think that the thinking is that it would probably be based on a climate package about $500 billion, which was basically based on the House passed bill. And then Senator Manchin has said he wants to have deficit reduction as part of this. And so does that mean another $500 billion deficit reduction? Does it mean more than $500 billion? Does it mean something much smaller? As you've seen for the House passed bill, there is a number of tax increases in there, individual tax increases, mostly on the corporate side, the international side, as Senator Sinema knocked out the corporate tax rate increases and the individual top rate increases. So they were dropped out of the bill before it passed the House. But we still have lots of revenue on the table they could play with as far as like paying for a package and then providing some revenue or some deficit reduction as part of that package. So we'll see how that progresses over the next several weeks. I do not expect something to come together quickly. Probably something, I think they're looking for resolution of this by July 4th or before they leave for their August recess. To me, is kind of the time frame for this issue to get finalized and resolved, and so we'll have to watch it as it progresses going forward. Obviously, they did not also do extenders in the last packages. I think the view is that they're going to be probably issues that they, unless they can fit them on a revised Build Back Better plan or something else, which doesn't look very likely. It's probably going to be an end of year exercise, post-election December exercise to get extenders done in that context, in that effort. So kind of watch how that plays out as well. One last thing on a smaller scale, but also important, is the Secure 2.0, kind of a pension retirement bill. It's on a bipartisan basis that passed out of the House this week. 400 plus votes in favor of it. There is a provision in there, a modified version of the Legacy IRA Act to expand the charitable rollover provision to include split interest entities as part of that for a one-time contribution as part of the House passed bill. The Senate is going to take, write its own version of that. I would say about 80% similar to what is in the House version, but a number of provisions they want to add and modify from what the House passed. And we expect the Senate Finance Committee to have a markup on that bill sometime in the May time frame through the Senate Finance Committee. Also, the Senate Help Committee is working on some provisions in there as well. So I'd expect that to be an issue to be dealt with in the May time frame. And then can it pass the Senate before the end of the year? Possibly, but probably not. But probably also be another issue to be considered as part of the end of the year package in December as well. So we'll have to see how that progresses in the Senate going forward. So I'll stop there. A lot of things to talk about. Happy to answer any questions or take any comments.
Thank you, Wes. Well, I mean, I wasn't lying to you all when I said that, yeah, there's been spring, but there's tons of things that have happened in March. March feels like, I mean, it's been its own year at this point, legislation-wise and in Congress. So I am very happy that my colleague, Ben Kershaw, has joined us. So really happy. I just want to say welcome, Ben. But I have a couple of comments. So I'm also really happy that the government shutdown was averted, and as Wes mentioned, that the Senate and the House were able to pass the omnibus, and we were funded for the rest of fiscal year 2022. So other things can move ahead, but as Wes mentioned, it looks like it's not going to be easy to finish putting together that Build Back Better package, which is not a Build Back Better package, is more of the negotiation pieces with mention regarding tax credits for energy and other pieces of tax revenue. But I'm curious to see where is that going, and for you to probably explain to our members why is it that some of the provisions that we are very interested in, like the expanding and extending the charitable deduction, why do you think that we may need to wait until an extenders package for that? And that why wouldn't that be able to ride on this package that may come together sooner?
Yeah, good question, Anna. I think that there's lots of things we care about, lots of things that are out there. The extenders space of expired provisions. You have the child tax credit, the ITC, the above line charitable deduction that all expired last year. There's also the traditional extenders that have been out there. I think there's efforts to try to get those attached to a vehicle. The question is, what vehicle could they go on? There just doesn't seem to be a bipartisan bill other than this Competitiveness Competes Act, China Competition Sector bill that is in conference. But there are some issues with that bill in its core provisions that the concern is that they try to add new policies outside the scope of what it is. It could hinder that package getting done. But I think the view is if there is a really good conference, they find some agreement on some of the smaller issues, then maybe they can find a way to add some more to it. But I think the sense is that's probably too hopeful thinking, and probably not going to be able to add a big tax title to the China competes bill. And so the question is what vehicle do we have to then attach it to? And there really is nothing on the tax front outside this pension bill that is probably going to carry some of the tax provisions that you mentioned. I think that the pension bill, they want to keep it very narrow and focused on the pension stuff and not broaden that out to be extenders conversation. The Build Back Better plan, or revised Build Better, change the name to it, is really up to Senator Manchin and what he's going to put on that. And could that carry some more stuff in there? I think the answer is yes, potentially. But I think that Senator Manchin's interested in keeping it very narrow and focused and smaller. And so, from the Democrat standpoint, they want to do the child tax credit that expired at the end of last year. And then the Republicans would maybe want to do some business provisions, but the question is can they negotiate something, outside of the Build Back Better plan? The reconciliation bill would be, only partisan, right? So only Democrats would vote for it. And so that would be, a vehicle only for things that Democrats care about, not what the Republicans care about. And so really the only, bipartisan activity I see happening outside the China competes, bill that's in conference is really, towards the end of the year conversation on extenders and year end and things. So, if things change, if they get, decide to do something between now and then, I think that the omnibus bill passing and moving on and getting done without extenders on it, there really is not a vehicle for that at the moment. That's an easy target to jump on with our provisions.
Thank you, Wes. We do have a question from Laura, and I think she was referring to the provision in the president's budget regarding private foundations and DAPs. But her question, I think it's a clarifying question saying that private foundations cannot make DAPs to meet their payout requirements.
Yeah, right now, private foundations can make a contribution to a donor advised fund, and it counts towards their qualified distributions as part of their payout requirements. The Treasury Department, or the President's budget, including the Treasury's Green Book, include a provision that would stop that and prevent private foundations from able to count those donations to a donor advised fund as a qualifying distribution for purpose of their payout requirement, unless the DAF was able to show to the private foundation donor that money was then passed out within 1 year of the donation. So it couldn't, the concern that they raised was private foundations making donations to DAFs and the money being parked there, but the foundation being able to count that towards their distribution, payout requirements. And that's something that the Treasury Department included in the budget. It's also a provision in the ACE Act. And so I find it interesting that they put that provision in there, but didn't do anything beyond, beyond that, including other donor advised fund changes. So that's really the only targeted provision in the budget from that standpoint, affecting foundations and donor advised funds in the budget. That's what we do.
Thank you, Wes. We also have another question regarding if there are any updates regarding the implementation of the Infrastructure Investments and Jobs Act, more specifically on the nonprofit energy efficiency pilot program.
Yeah, good question. I've not seen, obviously there was a need for the omnibus appropriations bill to get enacted so they could have some of that funding released and move forward on some of those projects that were part of the infrastructure bill that passed last year. I'm not sure where the guidance is for that or funding particular provision, but the omnibus appropriations bill being passed, it'll help it to move forward.
So I can jump in on that one. Hi all, apologies for my tardiness. It's good to be with you. The White House did release a website called build.gov containing a guide to implementation of the infrastructure bill. and there is a lengthy PDF with all of the various programs in there, including some rough estimates about the next milestones for those programs. So I dropped a link to it in the chat. On page 214 of that PDF, the administration's estimating the Department of Energy may open applications in the first quarter of 2023. I know that some organizations who had been deeply involved in advocating for this program, who we were proud to work with, I think they had been expecting that date to be a little bit sooner. Obviously, first quarter 2023 is not as far away now as it was in November. So I think a continued opportunity for us all to push on the agency to move as expeditiously as possible.
Thank you, Ben, for that information. We are all very excited to get to work together in implementation of the American Jobs Plan, for sure. So I have not seen any other questions come in, but in the meantime, I don't know, Ben, if you have any questions about the president's budget or anything that was mentioned before.
So one thing that I think is really notable that is not in the president's budget is what I believe we've called in the past a win of omission. So President Biden previously had proposed capping itemized deductions, limiting itemized deductions when he was on the campaign trail. This is an old holdover from the Obama administration. And this is a town of zombie ideas sometimes. And the fact that it didn't appear in the last budget was really gratifying, but was also amidst the White House's real push to find offsets for Build Back Better and for the jobs plan. And it was possible that was going to come back again. So we're, again, zombie ideas, we will keep the guard, but I think really encouraging not to see that in there. There's so much affirmative advocacy that we as the sector have to do that we don't need to be fighting old battles too. Wes, there is one question that I noticed came in. I think it went directly to me. Is something, if we could reiterate about conservation easements and modifications.
Yeah, so there's been some IRS activity on syndicated conservation easement partnerships. People were able to syndicate a partnership structure, and various people agreed to the partnership, and then they were able to make a conservation easement from the partnership and get a triple deduction that exceeded by many times their investment in that partnership. And so that was viewed as abusive, and the IRS has gone after those transactions. There is legislation in the Senate by Senator Stabenow, Senator Daines, to modify the rules and to shut down those syndicated partnership conservation easement transactions. There's a provision in the president's budget that would basically limit that contribution to a partnership if the contribution to a donation was more than 2.5 times the value of what the partner made as a basis in the partnership contribution. So it's technical, very complicated, but basically limiting the ability to put money in a partnership and the partnership make a conservation easement donation and get a huge tax benefit from that small contribution. So they're limiting that to help rein in those abuses that have been taking place in some of those conservation easement transactions, along the lines of what the IRS has been going after, along the lines of what legislation that hasn't been enacted yet by Senator Daines and Senator Stabenow in the Senate, and kind of putting that proposal on the table as part of the budget.
Thank you, Wes. So as we wait for other questions to come in, I have a couple of updates that I would like to share with you. Again, yeah, I wasn't kidding when we said that March has been a super hectic month, not only on the Hill, but also for nonprofits. So I want to share that on March 17th, St. Patrick's Day, I'm sure that many of you already have seen this, but the Senate Finance Committee actually hosted a hearing titled Examining Charitable Giving Trends in the Nonprofit Sector. But and as Ben mentioned, we're going to take wins where we can, and this was definitely a win in the sense that this type of hearings happen every 10 years, and this was a great opportunity to discuss the importance of the charitable giving deduction, and also the need for expanding and extending the expired provision, right? So our very own CEO, President and CEO of Independent Sector, Dan Cardinelli, was one of the witnesses in the hearing, and well, he definitely highlighted not only why is it important that we expand and extend the charitable giving deduction, but that we are also providing nonprofit organizations with the resources they need to continue serving their communities. He spoke about the need of reinstating the employee retention tax credit, as well as talking about the volunteering mileage rate, the need for an increase of that, the importance of passing the Legacy IRA Provision Act. And so what I would take away from that hearing is that it was very positive. It was super bipartisan. If anything, we need more hearings like this in DC, well, in the Senate and in the House. There was a lot of camaraderie from senators who definitely support this issue. Senator Langford, who's champion and who's been fighting for the expansion and extension of a charitable deduction, acted as co-chair of the hearing. So I think, if anything, this sends a clear signal that Congress is paying attention, that this issue may be included at the end of the year in an extenders package. So this is a reflection of the great work that the community is doing. So I just wanted to highlight the hearing there. And of course, the other witnesses on the panel included Susanna Morgan from the Oregon Food Bank, also Una Seeley, which we all know her from the Indiana University Lillian Family School of Philanthropy, and also Eugene Sternley, which I know that we're all familiar with from the Urban Brookings Tax Policy Center. So I just wanted to highlight that. I do not see any other questions coming in the chat. So if you have any pressing questions, please submit them. And another thing that Wes mentioned that I just want to lift up again is that the House just voted on the Secure 2.0 package, and again, this is another I would say victory or small victory for the sector, that the Legacy IRA provision was included in there, and it also has a potential that, of course, the Senate it's going to take up and do its own version of the package, but we have very important champions who also show up on the Senate Finance Committee hearing and lifted this issue. So I would say that that's also a great thing and very positive. So not seeing any other questions. Is there anything else that we would like to say as a closing remarks before we allowed our audience to move on with their Thursday afternoon?
Anna, that hearing that you mentioned was the third hearing of the week in the Finance Committee. And we got the distinct impression that the other hearings were not quite as kumbaya as the charitable sector hearing. So, I think it's an important reminder to Senate staff that they should have more hearings about our issues, and that we as a sector have a real tremendous asset in that kind of wellspring of action and support. So we're ready to keep going.
Indeed, please. I mean, they know who to call. Anyone from the nonprofit sector will happily be there in as a witness in their hearings. So yeah, no, we are very grateful for the Senate Finance Committee staff for keeping the sector in mind and being great partners indeed.
Yeah, just to build upon that, I mean, I think that's positive that they were willing to take some time to actually have a hearing on the charitable issues, the charitable deduction, et cetera, as part of their busy schedule. So it's, we need to take advantage of this and make sure that we build upon this going forward with the Senate Finance Committee staff, who was very good to work with. I think members, there was good attendance from both Democrats and Republicans at the hearing, a lot of good questions, a lot of good support for the sector and the charitable deduction. So I think it was well done overall. Hopefully it will pay dividends and we can kind of build upon that going forward as a sector.
Indeed. So with a full March month, I hope that those of you who are in Washington, D.C. are able to go see the cherry blossoms if you can, while they're still blooming despite the weather. But so I hope that you all have a wonderful afternoon. Thank you so much for joining us on this March monthly policy update. And we hope to see you again in April. Thank you for your partnership and all your hard work. Thank you so much.
Thank you.